Okay, hi there everyone. I'm Pooja Sarkar and you are here at the Forbes India handle and welcome you all. We're going to talk about private equity transactions and how how it's all going to shape out when it comes to distressed asset transactions and what is really happening in the space of private equity. I have with me one second. I have with me Mr. Sanjeev Krishan, who is the senior leader and at PwC. I'm just trying to add him. Just give me like 2 minutes, and I'm just trying to add him. It's become a little challenging today, but we're gonna find him. We're gonna find him. Okay. Can you just? There is some technical glitch that you are getting into. Okay, I found him. Okay, let's see. I hope I have not messed it up. And let's see. We're waiting for Mr. Sanjeev Krishan to join in. And here he is. Hi, sir. How have you been?
I'm very well, Pooja. I hope you're keeping well and keeping safe.
Yes, sir. I'm perfectly all right. How is things back home at Delhi?
Well, not too bad. This is my first day in office, so we'll see how it goes.
Okay, congratulations on getting back to work. And without taking much of your time, let's start with our favorite topic, what's happening in private equity.
Well, I think there's been flurry of activity, as you would have seen from the news reports in recent times. I think largely most of those have been concentrated in a particular segment. But I think safe to say that from my perspective and whatever we have been hearing, I think private equity and private credit, both of those have significant opportunities. And considering what's been happening with the Indian banking sector in particular, their ability to lend, and the way the dissemination happens, and the amount of stress which exists in India at the moment, I do believe that on the other side, when we get to the other side of the situation that we are in, there will be significant opportunities for the PE guys in private credit. And I think largely what you would see is that a lot of funds are actually working on getting the pipeline right, because they're spending this time when they possibly will not put a lot of money out in the next 3 months, but possibly create a pipeline of deals potentially that they can do once things become clearer in 3 to 4 months time. So that's what my assessment is. A lot of work being done by them to find out investable deals and ideas which they can do on the other side.
True. There's one thing that I wanted to understand when it comes to a lot of the companies are stressed right now. And a lot of these promoters of these companies have gone ahead and fetched their shares with a lot of these banks, and margin calls have been happening. People have to increase the kind of pledges that they are doing. And a lot of people over the last 6-8 months, we have seen increased transaction with foreign investment banks who were subscribing to these kind of structures. What is the kind of change are you seeing in the system? How are promoters now trying to raise capital?
Yeah, so I think from a promoter, from a capital perspective, I think capital is scarce at the moment. And I think a large number of them are looking at, situations where this moratorium, which they have got, the 6 months moratorium, the 3+3 is going to be helping them. I think a large part of the focus currently is on making sure that the business continues to be resilient at this point in time. And the capital needs are minimized. There is a huge focus on liquidity management at this point in time, so that I'm not spending beyond my means. And I'm sure most of them are doing weekly cash flows, monthly cash flows to make sure that they continue to stay solvent and continue to maximize the amount of debt trades that they can do or debt raising that they could do. For some of the smaller businesses, I think
I think there's an issue with the network.
Yeah, in some ways, that is something which will help them come through the other side. But most importantly, what we notice is, a lot of the large corporates also starting to think as to how can they get into a consolidation mode. So let me just say one more thing. If you look at the early stage companies, in a lot of those cases, the investors are trying to drive consolidation because there's no point in trying to burn money across two or three vehicles. They might as well come together and make sure that there are two or three, or maybe one or two large and resilient businesses which come to being, rather than trying to invest in three or four or five of them.
There's one increasingly that we have been seeing, at least in the VC space, is the fact that people now want to invest in their existing portfolio companies. They are not really looking outside, and there's a massive amount of downward valuation that has been happening on the new transactions that are happening. What do you see is the way forward? Are companies now coming cheap, or are we really finding the real value of a startup to say, or how are things going to pan out when it comes to the VC space?
So I think, as you said very rightly so, I think the investors' focus is to work with their investee companies. I think if you look at the early stage investments that they have made, particularly if you look at some of the businesses in the edtech space, medtech space, I think many of these businesses are doing quite well. And because education is now through technology. Businesses who are in the medtech space are the only ones which could work during this lockdown period. But no doubting the fact that some of these businesses will see rounds at much lower valuations than they were in the past, and that will possibly mean that their investors might have to take a bit of some amount of write downs on their portfolio. And I think it is in that context that what I said earlier becomes more relevant, because you would see that again, let's just take the medtech space. I mean, why would different investors invest in four or five or six medtech companies? The investors there are saying that, okay, we have a portfolio, and there are five or six of these medtech companies. Let's put them together. Let's not compete with each other. Let's not burn cash in five companies. Let's create two or three stronger companies. So yes, some of the follow-on rounds will be at lower valuations, and that will create certain challenges in reporting as on a quarter-on-quarter basis. But I think this consolidation across the early stage companies is going to be a reality soon.
Coming to the larger private equity transactions that we are seeing in the market, there was some that we saw early in the days. There was a KKR, but the large amount of capital has obviously come in the entire Geo Platforms transaction, where GA, KKR, and the big guys have come and invested capital. We haven't really seen these big guys do any other kind of transactions at this point in time. Is there any pipeline where people are still working on transactions? If yes, what are the kind of categories? Or how are private equity firms dealing with their portfolio companies?
So I think, as I said, I mean, from a private equity portfolio perspective, whether it is the startups, but also some of these growth companies, I think the focus is on the portfolios, because they just want to make sure that there is resilience built into the portfolio companies. And most of the fund CFOs and the chief operating officers continue to work with their investee companies to make sure that they come out well the other side. In some cases, if there is need for incremental funding, in some cases, if there are need for operational assistance. Today, the need of the private equity investors, resources beyond capital are being felt like never before. And I think that is where I think a lot of time is being spent by the private equity investors. I think the first part of your question really was that, are there other deals? Very certainly. I think there is a lot of stress, and you asked the question earlier about the motor pledges and what it is doing in terms of the ability of those promoters to raise further capital. I think private equity investors are looking at those transactions very closely. I think there are a number of these businesses which are in groups which are reasonably stressed at this point in time. And I think if the operating model, if the operating business is, or the underlying business is good enough, I would like to believe that those businesses will see, trades and money coming in over the next 3 to 4 months, even before we can sort of finally say that COVID is behind us. Because, let's say there's a large retail business, there is value in it. Even if it's an offline retail business, there is value in it. I mean, some of those stocks have got beaten down a bit too much. and that obviously will impact the promoter, particularly if he has pledged the shares and margin calls, etc., as you were saying. So I think some of those, and I'm not just saying that one particular business. There could be many others. I think some of those areas will see trades in the next few months.
Coming to the distress asset part of the transactions, I wanted to understand IBC. No, none of the cases are going to go for a year now. What happens to the old cases? How are the resolutions moving in the old cases which are already there in the ecosystem?
So I think the old cases are moving well. In fact, in one of the cases, which was pending final NCLT approval, I think the NCLT approval came post the lockdown period. So I think the cases where a judgment was expected, I think the closure is coming in. I think the challenge is going to be that no fresh cases are getting will possibly get admitted. And I think the moratorium, effectively, the 1 year suspension effectively on IBC, means that any creditor cannot take any corporate debtor through the insolvency process for the next 1 year. There is some amount of uncertainty as to what happens with cases where a referral has been made to NCLT, but the admittance has not yet happened. And I think we will wait for the fine print to come in before commenting on that. But in some ways, the cases which are already in progress, where let's say a resolution plan has come in and a final adjudication is pending, I would expect those cases to continue.
I wanted to understand now the next thing being that, we do not have any visibility on when industries will really start at full capacity. How are people provisioning for it? And what do you think are the kind of transactions that we are going to see?
Absolutely right, Pooja. I think, it's very unsure as to when the businesses will come back to full capacity. I mean, it is a bit challenging when, there is significant amount of private consumption in a country, and a very large part of that private consumption happens to be of a discretionary side. So when will we come back to full capacity is really $1 million question. I think, and nobody knows as to whether this will be behind us, or we will have to start living with the virus. So I think in some ways it's a very difficult answer as to when will we be back to full capacity. My own thinking is that I think the possibly by the third quarter we will have, because by that time we should also know whether there is a second wave or not, and this is just my personal view. So if there is going to be a second wave, God forbid, then it could be a different thing altogether. But if there isn't going to be one, then you would expect that semblance of respectability to company operation should come in around the time of Diwali, and we have a late Diwali this year, and hopefully it will also be the time when demand will pick up in a way that it might not before that. So I would think that the latter half of the third quarter is when I would expect things to get back to normalcy. Unless, of course, as I said, there is a second wave, in which case, it's very difficult to say.
Just wanted to understand, a lot of these LPs who have committed capital to these global funds or the Indian funds, what are the LPs saying at this point in time, or when they look at India, when they look at emerging markets, and also when it comes to valuations? Are we going to change the metrics on how we value a company going forward? Because all the past valuations wouldn't really stand at this point in time, because you do not have visibility on how the entire year's performance has been. So do people have to now change the entire metric of how they have been valuing companies? And B, what are really LPs saying when it comes to investments in emerging markets, especially India?
I think obviously cautious about any investments at this point in time, and in any emerging market, but let me just say that and maybe just share an example. So in some of the conversations that we have had with some of the pension funds and others, I think what they're saying is that India continues to be central to their theme in the next few years. There have been large funds which have been raised for emerging markets, including China and India. And India continues to remain central to their investment theme. So they still plan to put out large investment dollars in India. I think the political stability that we have in this country, I think some of the medium to long term measures that the government has come up with as part of its stimulus package are all very well meaning. you can always debate whether there was enough in the short run, but I mean, definitely if you look at the medium term to long term measures, they are good, and I think these will, in some ways, be be causing the positive effect on the investing community at large. However, if you look at in the near term, I would see that there would be some challenges. I think. The risk premium that they would attach to any investment in India in the near term might actually go up, which would mean that the potential investment has to return higher thresholds for them to be able to get convinced, and for their investment committees to get convinced. So in the near term, I would expect that people will be a little bit more circumspect, and hence either businesses which meet their thresholds will get funded, or businesses where they can actually get a deep discount will get funded more easily compared to some of the others. But I would think that, and I'm actually fairly convinced that the long-term story on India continues to remain, and that's a feedback that we continue to get.
And lastly, before I let you go, just wanted to understand, we've seen ITC acquire Sunrise. There are a few smaller M&A transactions that are still happening, although these are some of the transactions that had started before the lockdown. Are we going to expect some M&As, and what is your view on how will be the inflow of private equity capital in India for 2020?
No, Pooja, I think we are very pragmatic about it. I think a lot of M&A is bound to happen because it is going to result in significant consolidation in India. On the other side, as I said, people are possibly cagey to put money out in the near term, but I expect consolidation to drive Indian M&A in the maybe I would say from August to September onwards, that should happen. And on private equity, as I said, I mean, with the condition of the Indian financial services segment being what it is, where is the capital? I mean, if the banks have a different focus at this point in time, whether it is MSMEs, whether it is something else, etc., or they're struggling with their own NPA problems at this point in time, where is the capital? So if one is looking at alternative capital, private equity and private credit will continue to have a very significant place from an India standpoint, and I would expect both these asset classes to do really well on the other side.
When it comes to private credit, which are the kind of investors? Are we going to see the likes of SSG Capital or an Oaktree? Are those the big guys that we are talking about? Are there more people who are coming in and deploying capital? Or is it the existing financial services firms which are there in India who are looking to deploy? And which are the sectors where you're seeing more transactions?
Yeah, so I think first up, I think on this category, I think they will obviously be some of the names that you took. They obviously have been investing in stressed assets quite a bit. I think one will have to just particularly on stress asset investors. If I can just make the 30 seconds comment, I think it's important as what really happens on the IBC suspension, and also what kind of restructuring possibilities are allowed by RBI and others in the near term. I think that will determine as to how I don't want the momentum to break at some level from an investor standpoint. The momentum that some of these investors have set up about Indian investing should not break. So I think some of the view that they will wait to see as to what RBI and others have to say, and about the suspension on IBC, and hence what kind of resolution, what kind of alternative settlements or resolutions are going to be allowed. But talking more broadly, I would actually expect as we move forward, a lot of even traditional investors to be focusing on stress investing, to be able to provide credit, whether it is through an NBFC shop or other mechanisms, because that is what the need of the hour is going to be. A lot of Indian businesses will possibly still think that they have a better ability to turn around their businesses, and hence they do not want to dilute equity, or they do not want to dilute equity at the prices which may be available to them for equity. And hence the thing would be that if I have alternative collateral, can I use that collateral to take private credit? And to me, I think even traditional investors would actually be interested in looking at private credit transactions. And I don't want to name anyone, but I would think that private credit will continue to have a significant play in India. because I would look for private credit first before I go to private equity if I believe that I can turn around the business myself.
Cool. Thank you so much for your time, sir, today, and I'll let you go back to work. And please stay safe and stay fine.
Thanks, Pooja, and all the very best.
Thank you, sir. Take care. Bye.
Bye, Pooja.